Well, good afternoon, everybody. It's Gordon Stone here again. I'm one of the key presenters and mentors in the Northern Beef Business Mentoring Program. And today our topic is agribusiness financial fundamentals. So agribusiness financial fundamentals are equally applicable to the wider agribusiness sector as well as the beef sector, including other people in the value chain. So thanks everybody for attending, and Brett, thanks very much for attending again. Brett Collins.
Thank you. Thanks, Gordon.
So before we move on to a quick bio of Brett, just a bit of housekeeping. We know from experience that many people are joining us by telephone. You've already got the PowerPoints, and you'll also notice that because of bandwidth, download speeds, all those sorts of things, that we're keeping everything nice and simple. And if anyone wants to ask any questions, please put that in your little control panel if you're on your computer, or you can always send questions to us by email afterwards. So let's get started. We've got a jam-packed program. So Brett, this is a quick summary of who you are and where you fit. Is there anything important to add to this quick summary of you and why we're dealing with financial fundamentals today?
Yeah, I just think the key component for myself and my team is that the agribusiness is a key industry that we are involved in, and that we are seeing some significant change to and advancement in our clients' understanding of what is required in operating their business, both from a financial point as well as operationally.
Okay, thanks Brett. So just a quick recap before we get started. As you can see with our slide about the 12 pillars of business best practice, we have a logical progression over the next two slides, which is having a clear roadmap, focusing on those high-value customers with the right product, thinking and acting in a certain way, which we call a corporate way, which we'll discuss in a bit more detail today. Money. So that's a critical element of the whole thing, and that's where we're starting the financial fundamental discussion. Fundamentally, then we can give the same sort of engaged picture to our people, who might be our families, contractors, workers and so on. And our whole focus for a high-performing business is that it must be run systematically. We're also always thinking about, in particular, business risk, market risk, production risk and so on, which also leads us on to Pillar 8, which is the legalities of doing business today. And Pillar 9 is our concept of succession. It's rather than dealing with a crisis, our whole focus is what is the structure in which we can set up a high-performing business that can be handed on to the next generation as a going concern, highly profitable, and so on. That leads us to then thinking about value adding, leverage, how we can work with other people to maximise the value of working with them and elsewhere in the value chain. And ultimately it's about sales and marketing, selling our product, which fundamentally too is about external communication with the marketplace and internal communication amongst our people. So I just simply wanted to set the scene because money and financials is a critical element of where things are heading to for a high-performing business. So our agenda really today is about three critical things. The concept of sustainability, which for those of you who joined us in our succession webinar before, Brett touched on. Metrics, which is going to be the key focus of today, to get to a clear end in mind. So being able to measure what we do, manage what we do, and we want to create some simple golden round rules around the financial fundamentals and about the figures. So Brett, anything to add to that before we move on?
No, I think we'll talk a little more about that sustainability, because it does cross across into a succession discussion as well, and how your finances and financial fundamentals actually build and develop that sustainability program as well as a succession program.
Thanks, Brett. That's a good lead into your definition, which I'd like to repeat here, just to give people a sense that sustainability is not just about environmental things. From our perspective, it's particularly about business and people. Is that the case?
Yeah, there's definitely a business plan you need to have in place, but it's also understanding personally what the people now require and what also in the future, any succession type plan, what those I suppose parties that are eagerly trying to understand what we're doing now, how that's going to affect them in the future, and making sure that there's an understanding both personally as well as from a business point that they coincide and collaborate.
And I really like this, the component of your definition that talks about not compromising the needs of the future. So that actually fits with our idea of a clear end in mind, clear vision, clear picture of sequentially moving towards that clear end in mind.
Yeah, well, you definitely don't want to make financial decisions today that impact impact future generations or compromise the ability to actually hand it on to the future generations or an investor in the future.
Okay, so that leads us to the concept here about the plans, the strategic operational plan and the strategic financial plan. Is there anything you'd like to say about that before we actually move into we'll call it the key success factors?
Well, the key thing is here that there's a plan and a vision. And the key thing for me is we've got to understand what we currently do, what we want to do, and what the future look like, and that everyone actually understands and is aware of that approach.
Okay, thanks, Brett. So I suppose with this next slide, which we call the difference between success and struggle, we're trying to distinguish what it is that will set apart a high-performing business. So the things for me are in particular about the people, about the plan, having a business-like approach, and engaging with not only we'll call it our work people, but our advisors, hence the idea of a network. So Brett, in terms of these components, could you just take us through the key elements from your point of view?
Well, the key word on that page, in my opinion, is the independence piece. Too often we all get very caught up in our everyday operations. And what this approach and understanding sustainability in full and the difference between making it successful or as a struggle, as the heading says, really revolves around ensuring that you have a consistent, measured, independent approach to achieving that sustainability. So that independence piece outlines involving advisors, your trusted advisors, within the family decision making or the corporate decision making.
So when we're talking about the right network of the right people, in my mind, it even extends to something like a governance or an advisory board, which might be an agronomist, it might be someone like yourself, it might be somebody like myself, it might be a specialist marketer, it might be a range of key people who might even come and go from that process to keep everything, I guess, business savvy, thinking strategically, keeping things simple and having a very structured plan. Is that how you see it?
Absolutely. There has to be an initial commitment to sit down and understand what that looks like for your business and for your operation before you can identify a way forward, because every family, every farming operation, every industry within agri are different and have different advisors or people that are what we call that important piece to bring the independence.
Sure. So once again, to me, it's all about having that clear game plan, helping people help you organise the game plan, because I guess it's difficult in this current marketplace to understand that a business owner knows everything about everything.
Yeah, well, there's a plan, but that plan is both financial, operational, strategic and personal. That's the key thing here. And often there is other parties or interested parties that need to be considered in those processes, not just the one, whether it be the matriarch or the patriarch. It is the whole family that needs to be considered in that decision making when you're putting a plan together. So therefore, that's why you need independence in there looking at it from outside.
Okay, so let's now move on, Brett, because if we put ourselves in the shoes of those people who might be listening, we think of what they are currently doing, what they might need to do differently, and without making anybody wrong, we've just got a few little, I guess, checkpoints on this slide about what might need to change that might characterise those key success factors of a successful business. So would you like to just, I guess, articulate your thoughts around them?
Well, I think at the beginning of each, whether it be a financial year, a calendar year, or a new project, or when we're looking at the future, everybody in relation to their business has a vision or a thoughts in their mind. What it gets to is actually, again, having that commitment and that regularity of putting into place both a written as well as a communicated plan to those interested parties, where it can be both financial, it can be, as it says here, risk or management controls and discipline. It really comes down to identifying your game plan and getting it down onto a understood and agreed format.
Sure. And look, I know I bang the drum all the time about this end in mind, but from my perspective, unless we have that clear, articulated game plan with very specific steps through the process, people kind of get lost in the doing as opposed to the strategy.
That's a fair point, because every decision that you make now can impact that end in mind point. So I just think what I'm trying to identify here and make clear that there has to be a documented, independently reviewed or assisted game plan. And if we put that in place, it is then tabled across the group in again an independent discussion. It can then become very valuable towards that end goal.
So everybody is aligned and focused on the same end in mind.
Well, everyone's got all personal values and commitments that they have, so if it has to be understood so that that game plan can work.
Sure. Okay, so Brett, let's move on to the second item, which we're thinking about the figures and the metrics. Now, we've deliberately put in here things like management figures, accountant figures, benchmarking, and we've talked about the market value of our business, because I guess where our discipline is that the end game for any business, whether or not they ever choose to do it, is to set up a self-managing, saleable business capable of having an investor invest in it. So that's what leads, in my mind, onto the notion of systems as well. So what are your thoughts about these points, and why are they here?
Well, I think your key point there, that market value piece, there is always an investor, whether it be family, whether it be external, there is an investor, and we're trying to ensure that the value is retained and grows over time in the game plan we've just discussed. So the points that you started there being management figures, accountant figures, benchmarking, with some small points to that. What the management figures, the accountant figures and the benchmarking piece has to be timely. That's the key thing for me. In a lot of the past, it would be simply once a year there would be a phone call from the accountant to say, whoops, we've got to have our tax return ready in 4 weeks to be lodged, and that would be it. The information would be sent in and it would be done. These days, if you have the right information system in place, you can actually have a timeliness of information where, from a financial and tax point of view, we are up to date and on time, and having quality conversations leading into a financial year end, because what we don't want to do is, even from a tax point of view, erode our capital value. That's the key point. So we want to be talking both from a business operations point of view as well as a tax and compliance point of view. We want to be ensuring that that is all timely and up to date, and we're having discussions pre an event or pre-year end, so that we can roll into the year end doing the right things at the right time.
And one of the things I recall you saying last time, Brett, was in this day and age, banks are looking for timely information as well. So if they're a key investor or stakeholder in the business, then that's the sort of thing that they're going to be asking for, and that will be valuable to us to be on top of things. Absolutely.
In a lot of financing arrangements, there is now an obligation to have your year-end financials with the bank in a 2 to 3 month period after year-end, not simply when the tax return's got to be lodged. Or so basically, under a covenant, you may have to have that done, Gordon, in the first 3 months after year-end.
Sure. Okay. Let's keep moving along. So as we're thinking more about these figures and metrics, we're also looking at people to take responsibility for things. And I know in a business it's very easy to get tied up in the day-to-day affairs of doing things. And what we're thinking about, and there are 2 slides here, one about the role of the CEO, the person who drives the business, and then in a moment we'll be talking about thinking a bit like a corporate. And so that's really about discipline, as I see it, Brett, about managing the money, looking at the governance and accountability side of things, and just being very organised and structured.
Well, something we've absolutely, something we've discussed previously is when is the right time to catch up and ensure that everything is being done correctly and in a timely format. and that allows then for the clear direction or meeting banks' obligations, whatever it may be, or finances or new leases you're doing. The thing that I would say here is it simply comes down to a structured consistency that is put in place where you have a structured monthly or quarterly meeting with those independent trusted people that are helping you manage your business both from an operation and a strategic point of view.
Okay. So let's move on, because we can talk about this a little bit more in the context of thinking and acting like a corporate. So I guess I had my blooding in this years ago when there were some examples of things just kind of wheels falling off the wagon, so to speak. So I guess that was where our thinking was, we need to actually take a very structured and disciplined approach. Our intention was never to be the CEO of a supermarket chain or anything like that. The same principles still apply to the person who's running the business, and so the corporate principles of being organised, structured, disciplined, focused, and maintaining momentum towards the end game are really the key thing. And there are people I know who say, oh, well, look, in a family operation that becomes complicated. Equally, the question is, why wouldn't those disciplines be brought into it? Any thoughts?
Yeah, well, as I mentioned a bit earlier in our discussion today, was often the matriarch or the patriarch, people leave those decisions to be made by that person, and often that person does have a vision, or it's just been historical that those decisions are made by that person, whereas we're finding in our client base now that there is, i.e. these investors, whether it be family members, whether it be a third party, a person simply leasing the land, there is other people now strategically, operationally and financially involved that need to be included in that decision making. So this is where we're trying to get around to this understanding that our clients are moving down this structured and disciplined approach that they are having, whether it be monthly or quarterly meetings where we actually sit in around that table and all of the parties are there, and it's actually quite an agenda that is set and discussed, whether it be a normal routine where we're talking financials, we're talking some operational changes, or whether it be a large project in there, whether there be an industry significant change, environmental matters. It is a well-drilled agenda with extra topics then that everyone adds to, so that you have a structured meeting and disciplined approach to it.
So I guess that leads us to probably a couple of elements to think about, one of which is, if it's business as usual, we still need to be disciplined. If we're thinking of making a change, everyone needs to be lined up with the change. Everyone, I guess, has to have their say, and in addition they have to think through the mechanics of the implications for them and how it's all going to work, because we bring in that whole risk management element of making sure everything stays on track.
Well, the key thing that affects down the bottom, maintaining that discipline momentum, is actually decision making. And what happens too often is that there is a person who's making all the decisions, and that sometimes, and nobody really will have an opportunity to speak up, or they may be in different geographical locations on different farms or whatever it may be. And when there has to be those timely decisions, if that is one single person making that, it does sometimes restrict the momentum that a game plan is evolving or building in, because that one person can make a decision. If they've got a lot to make, it can sometimes go against what everyone else's thoughts are.
Sure. So everyone needs to be engaged, and I guess the notion of a CEO is to lead the charge, and at the same time to make sure that everyone is on board with the charge, and if there are issues to be addressed, then they get worked through as well.
Absolutely, and that's about this momentum piece. Yeah.
Okay, so we'll move on. I always give people an indication of what we're doing with the business mentoring program. This is one of the business updates, just keeping people informed about all elements of creating a high-performing business. The one-day Better Beef workshop program is simply to allow people to do a stock take, and we always talk about the idea of becoming an outsider looking in, and sometimes I would put it to you that, or to others, that a CEO's role is sometimes to step away from the business, to become the outsider looking in, to make sure the regular stock take is done. Then we move towards our CEO mentoring program, which is around those 12 pillars of business best practice, where we get people like yourself and others. In fact, we've got somebody lined up shortly to talk about the Chinese market for the beef industry, who comes into these programs and helps us think strategically, think outside the square about what needs to be done differently. So probably another quick point to make too is that people can regard this sort of process as being professional development, bringing people like yourself in, Brett, people from Meat and Livestock Australia, from other sources, to help people think outside the square. And for 2016, we have a strongly subsidised program. So I guess it's important that we remind people that that's what we're doing.
I think the key point here, Gordon, which your program is very designed towards, is it gets rid of, it's very overwhelming for some individuals or family members who are actually that key decision maker, and there is a lot of people around that person who actually are ready to or available to step up and assist in that process. And what your program brings is that absolute mentoring program to help that person develop their skill sets, because in a lot of circumstances that key decision maker has made, as I said, all decisions. So that person who's in that position, whether it be age or now have the time to do it, whatever it may be, they need these skills and need this mentoring to be able to step up and have the confidence of that key decision maker to pass on some of those opportunities or to assist them in that process.
Yep, makes complete sense. So Brett, as we're drawing this to a close, we've got, I guess we're trying to bring some golden rules to bear. And really I think they're encapsulated in the top points up there: plan, measure, manage, and always bring accountability to things. So is there something you'd like to kind of summarise here to bring things together?
I think the big change that I'm finding is that because information is now timely, that actually gives a real advantage when you are talking to, whether it be a financial party or a strategic decision that you're making, whether it be dealing with the tax office. Now doesn't have to be all post-event. It can all be done in a structured, timely manner where we are talking to you before year end on regular basis to ensure that we are not eroding value, that we are consistently working towards growing value and also maintaining a consistency and a regular performance measure of how the business is going.
Okay. One of the points I'd like to make about that particular slide is the idea of reporting outcomes, because from my perspective, it's really important that everything stays on track. And while other things are kind of hidden away and kind of talked or whispered about, that's one thing. But if it's put on the table at that advisory board level, or put on the table in front of advisors, or put on the table in front of family members, then everything is out there, it's fully accountable, transparent, everyone can see what's going on, and it, particularly in families, moves away from some of this kind of whispering that happens behind the scenes, if I can be blunt about it. So do you have a view on that concept, Brett, of?
Absolutely. In every family there is always something, as we say, this game plan or this end point in mind of whether they want to buy more property, they want to have a succession plan in place, they want to buy more equipment, they need to change their herd numbers. You could just go on and on with that. Every farm or every family has those visions and those requirements or those wish lists. Now, unless you are on a regular basis ensuring that you're quantifying your position and measuring that position, you're not ever sure of really financially where you're at. The old days of actually working out how much is in your bank account and that's how much you've got to spend, those days are gone, and that doesn't create healthy value adding to your family succession plan. So I just think what we need to understand is if you can put a measured and a structured plan, consistent plan in place, that only helps towards this end goal that we've been talking about during this discussion.
Sure, thanks Brett. So I guess summarising things, I always look at things from the point of view of succession, because our objective is always to look at this from a point of view of a planned owner exit strategy, which is our option one, Option 2 is that proactive succession process, which might be the investor, it might be the family, it might be a sale, it might be a self-managing business that you can go away and leave for a time. It's all around the idea of the high-performing self-managing business, and it's always based on those 12 pillars of business best practice. So, Brett, just drawing this to a close, we've decided as a result of our discussions since our last webinar that we would invite people, if they wanted to have a conversation with you and I, to do so, that they're most welcome to do it. No obligation, no nothing, because we know that there are people out there who have questions about some of these points, and so we're quite happy for them to email us at that address up there and look at making an appointment to have a conversation. So are you comfortable with that notion, Brett?
Yeah. Well, we found, Gordon, whether we're doing a live presentation or a webinar, we have always, at the end of the events, had significant interest in talking about their business, or they have questions, and I think that's really why we've talked about this particular matter, where it's not so much a sales pitch here. What it is actually is getting down and working out what some people have and as their queries. So I think it's a healthy 30-minute session with no obligation. Hopefully that would open up some further discussions.
So it just might help people get clear about some things.
Absolutely, and that's how we want to keep it.
Great. So Brett, we're going to close things off in a minute. So do you have any take-home messages from the presentation today you'd like to leave people with?
Yes, I've mentioned a few times through it. The key thing here is understanding what your financial position is on a regular basis and ensuring you put in place a consistency that you are actually looking at that on a regular basis, and that needs to be discussed with your trusted advisors, whoever that may be, whether that's your accountants, your lawyers, your agronomists, the likes of Gordon and his team.
Okay, thanks, Brett. And so I guess from my point of view, that notion of talking to your trusted advisors is critical. From our perspective today, what we've tried to do, or our intention has been to provide questions for you to pose to some of your trusted advisors. And so if we've achieved that objective, then I'd like to think that that will be useful to people listening in. So thanks for your time again, Brett. Much appreciated.
Yep.
Everyone, as you sign off, you may find that there'll be you will find that there'll be a little review form that will come up. And so we've actually found that extremely beneficial to us. I was looking through the results the other day and discovered there are a lot of people who have particular times of day, like lunchtime and evening, where these webinars are useful to them. We've discovered that there are people who are finding it's quite useful to help them become the outsider looking into their own business. So I'd like to commend that that feedback form to you, to everyone who's listening in, because it does help us structure what we're doing, how we're doing it, and our intention is to make it as useful as we possibly can. So thank you all for attending, and Brett, thank you once again for your time.
Great, thanks, Gordon.
Thank you.